board Ravi Chawla, who's the MD and CEO at Gulf Oil, to join us and talk to us about their numbers, the way forward for the company as well. And, Mr. Chawla, let's start with, firstly, the number that the street wants to know is in terms of what were your sales volume in million liters for Q2 FY24?
Well, the quarter two is normally a seasonal quarter, which has monsoon, so generally lesser usage of lubricants. And we also see that infrastructure segment, other segments, the consumption is low. But very happy to share that we've done quite well in the quarter. We've done a core lube volume of 34,000, which is a 6.5% growth over last year. So it's a good quarter in that where we saw a lot of robust demand in all our segments. Primarily the OEM side grew very well, the infrastructure and B2B. We also saw a good pickup in the agri segment in September end. And we've seen some segments like motorcycle, which are tracking better. So clearly for us, the product mix has improved and the margins have also gone up. The cost was stable and we've also focused on a better product mix. So a good quarter, and for the first time we have crossed an EBITDA of 100 crores a century for a quarter for our company.
Sir, core volumes grew by around 6.5%. However, AdBlue volumes, and are you still confident of achieving the FY24 target of core volumes growing around 7 to 8% and AdBlue volumes growing around 15 to 20%?
Well, definitely, we've been growing 2 to 3x the industry growth rate, and industry growth rate will be close to 3% in volume in core lubricants. Well on track to do that. Last year we grew 15% financial year. This year also now we are tracking well. Second quarter has come at 6% core lubes. AdBlue is a product where we have got a large distribution base of commercial vehicle oils, both with OEMs and in our bazaar market and other segments. So it's a market where AdBlue consumption is growing. So even that is done very well and it continues to. So I think both these targets are well in sight. And AdBlue, as you know, is an add-on product. It's more about distribution, and overall core lubes is also in a very healthy state. And given our brand and the strength we have, we are also increasing our distribution, both urban and rural. So all in all, I think both the things are on track in terms of 2 to 3x the market growth.
Okay. So, sir, when it comes to margins, now margins were around 11% for the last 4 quarters, and they have expanded to 12.6% in the second quarter. Firstly, what aided this? Secondly, is it sustainable given the fact that oil prices have again spiked?
Well, you're right. So this quarter, because of the product mix and the B2C, B2B and other ratios, definitely our focus on better product mixes helped us. Costs have been stable in quarter two, but as we look at the current increase in crude oil and of course a lag effect on the base oil, we will have to take price changes accordingly, and that happens. And margin management will be key, and that is why we've been looking at this 12 to 14% band. And happy to share that this quarter we have seen a movement towards a higher level compared to the previous quarter.
Right, sir. And just want to understand, will you be taking a price hike then as well?
We have to wait and see. The base oil usually takes a 2-month lag time compared to the crude, and we also have to see this demand supply. So based on that, if it continues, definitely some increases are there. We do adjust a few prices with the schemes. And regarding the B2B and OEM customers, it's a price variation kind of formula which goes up and down based on the input cost of the base oil. So yes, if this trend continues of the base oil based on the crude situation, and of course base oil is a derivative, we will obviously adjust our prices, but margin management is also key for us, so we don't want to lose out on the margin. So definitely some price corrections when we wait and watch will have to effect as per the movement.
Right. And Mr. Chawla, if I want to understand in terms of the rural demand trends, especially for the agricultural lubricants as well as motorcycle oil, how is that shaping up?
So you're right. So the rural sector is usually the agri, which goes with the tractor, usage of tractors. The seasons are there. There are a couple of seasons in the year. So September is the season again, which has started, which has gone well. So September, October, November. And it is also consuming motorcycle oils. So rural demand, we have seen that we are able to increase our distribution, and we are seeing good growth in that. And the challenges are there because obviously the prices of the products are high. So we have got some value packs we have put into the market there in motorcycle. Tractors, we have got some of the best products, but we're also looking at some value products. So to cater to the agricultural demand, it's surely about distribution. We also have OEMs who we do the tractor oils for. We are seeing that this season, September onwards, is going to be a good pickup. And September clearly shows that there is a pickup in the demand in this sector.
Okay. Sir, now we were having a conversation with Gulf Oil's promoter group, that is Hinduja Group, and they mentioned that they're looking to expand Gulf Oil into specialty chemical business as well. Can you share some more insights on the same, like what is the kind of capital expenditure that you might plan for this business? What is the kind of revenue potential that you're seeing going forward?
Yeah, so the vision at a group level and at a Gulf Oil international level is to look at this area. So certainly it's an area which is the vision is there to see and explore what are the possibilities. And I think once that is clear, then obviously we'll have plans and see how they fructify. Yes, definitely an area which the group is looking at. So I guess that is an area to watch out for and see what can happen here.
Okay, Mr. Chawla, thank you so much for joining in with us this afternoon on ET Now and giving us an understanding on what we should be expecting from the company and the new area of business that you will be looking at as well. Thank you so much, Mr. Chawla, for joining in with us. That